Hi guys, Ryan here with Leap Financial, and this is an introduction to building more wealth by using an IUL as the foundation of your financial future. If you made it to this video, you're likely interested in one or more of the following things. Number one, having more income for retirement. Number two, growing your money with less risk. Number three, becoming your own bank to lend yourself money for investing or business dealings. Number four, looking at my handsomely animated face. Number five, paying as little in taxes as legally possible to Uncle Sam over the course of your life. Or number six, setting up a legacy plan to carry your wealth into future generations. Ultimately, you likely want to use what is in your control to predictably create more wealth and become financially independent. So if any of these goals are important to you, then watch this video all the way through to understand how we may be able to help you accomplish them. And even if you don't share these goals, or if you're just curious, stick around anyway. You might just spark some new ideas about what is possible for you with your wealth and finances. So let's get into it. A properly structured IUL, or Indexed Universal Life Policy, is often called a financial Swiss Army knife because of its many uses. And most of our clients are blown away once they understand what it can do to change the course of their life financially. So to start with the basics, an IUL has three key components that form the foundation of its abilities. Number one is tax-free growth, tax-free accessibility, and a tax-free death benefit. Number two is guaranteed protection against risk and predictable rates of return. And number three is guaranteed access to loans inside of the account. So first, how do you get the tax-free benefits on your money? Well, the easiest way to avoid paying taxes is just don't file your tax returns, and then move around the country frequently, hoping and praying the IRS doesn't come knocking on your door. Kinda risky. So if we really want to stick it to the IRS, then we need to play by the rules that they created to avoid giving them more dollars than we need to, but perfectly legally. And how are we doing that? Well, by placing your money into a properly structured IUL policy, a small portion of your money pays for a permanent death benefit, while the rest of your money creates what is called cash value. Cash value is kind of like a savings or investment account inside of the IUL that grows and can be accessed. And according to the IRS, as long as some of your money is paying for a death benefit, then the remaining cash value can grow and be accessed tax-free throughout your life. Then when you pass away, the policy can blossom into a tax-free death benefit to your beneficiaries. All a perfectly legal process to keep your money growing in your hands without giving the IRS a dime. Now, secondly, how do you get the guaranteed protection against loss and strong, predictable growth? Well, your cash value in the IUL grows based on the stock market, but without market risk. That means that each year when the stock market goes up, you can earn a strong return that is then locked into your cash value. But when the market goes down, you're guaranteed not to lose your money or your returns by the insurance company. And historically, most properly structured IULs have earned an average return of 6 to 8%, although there are several ways to actually increase the returns to as high as 10 to 15% on average, but more on that later. On top of the built-in security and predictability, the life insurance companies that provide these guarantees against risk are often 100 plus years old and among the strongest financial institutions in the country, even stronger and more stable than banks themselves. It is also very likely that in a catastrophic or apocalypse level economic event where the banks are failing, the markets are falling, and the world feels like it's ending, that these insurance companies would be the last dominoes to fall. This level of security and stability is why we are so confident with keeping as much money as possible as we can inside of these types of policies with very little concern about risk or loss. The same level of protection that an insurance company provides for your money does not exist in any investments in stocks and bonds, real estate, or even bank accounts. Now third, how do you access the cash value in the policy? Well, most IUL policies include loan provisions that let you borrow money from the insurance company using your cash value as collateral without needing any approval. This means your money is highly liquid and easy to access at any time very quickly. But here's the game changer with an IUL loan. When you take out a loan, it accrues an interest cost, usually around 4 to 5%. But your cash value continues to grow as if you never took the money out. So let's rephrase that another way. You can put in a dollar that is earning 7% and borrow it back out at a cost of 4 to 5%, and the original dollar is still earning interest while you have the borrowed dollar cash in your hands. This is why IUL policy loans are, in my opinion, one of the most powerful financial tools on the planet. Let's break down the implications of this even further. Well, if your IUL earns 7% on average and you can borrow against it at 4 to 5%, then that loan is not actually a liability like most other loans. It is actually an asset because the loan is earning you more interest than it costs you. This means that you could borrow against your money in the IUL and invest it in something else while those dollars continue compounding in the policy too, earning interest on the same dollar in two places at one time. You could also take a loan out against your policy, then reinvest it back into the same policy, where you are now earning interest on the dollar that you borrowed against and the dollar that you borrowed out and reinvested back into the policy, earning interest on the same dollar twice in the same policy. You could also take out a loan against the policy to cover large expenses, whether it's for a mortgage, taxes, vacations, down payments, or other major expenses, while continuing to earn interest on that expense even after you pay it. You owe $20,000 in taxes? Well, borrow it from your policy and keep compounding that $20,000 even after you pay the IRS. Boom. These are just several examples of how using an IUL in different ways can create a lot of extra wealth over time by getting multiple uses out of every dollar and earning uninterrupted compound interest. This creates more wealth for you and your family and more dollars that can be used for retirement, passive income, giving, or investing. Speaking of wealth for you and your family, let's jump into the legacy factor of an IUL. Beyond the wealth that you build while you're alive, there's still the death benefit in the policy. So if leaving money behind for your family and establishing a lasting legacy is important to you, then you can actually set up a structure that allows for your death benefit to be automatically reinvested into new IUL or cash value policies for your kids, your grandkids, and the future generations. Each policy on each member of the family is funded from the death benefit left behind from your policy and or any other assets of your choosing, creating a multitude of death benefits in the family that continue to add to the pot of wealth over time. At the same time, an ever-increasing pool of cash is established and growing in these policies that can act as a generational family banking system to help fund your family's higher education, home purchases, weddings, first vehicles, business startups, retirement income, charitable giving, and much, much more. This is how you can build generational wealth very, very simply, by making the decision to use your IUL as the foundation of your finances today and letting it do what it does best to grow and multiply your wealth efficiently over time. So if you share any of these goals or values, whether it's making every dollar work as efficiently as possible, achieving financial independence, retiring well or retiring better, watching more videos with my handsomely animated face, becoming your own bank for investing, or leaving a generational legacy that can last hundreds of years, then we have several more educational videos that you can watch to learn more. Or if you'd like to jump right into a conversation on how we may be able to help you accomplish your financial goals, you can reach out to us directly or contact your Leap representative to schedule a call. Again, this is Ryan with Leap Financial, and I hope to see you soon.